Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. The Iraqi Dinar, IQD, despite being the official currency of a resource-rich nation, remains conspicuously absent from global financial markets. For many, this raises a fundamental question. Why is the IQD not internationally traded like the US dollar, euro, or even some lesser-known emerging market currencies? While it's tempting to point to a single cause, the reality is layered, involving economic policy decisions, geopolitical instability, structural issues within the Iraqi banking sector, and international compliance concerns. Each of these factors contributes to the currency's current isolation from the global stage. Let's explore in great depth the reasons why the Iraqi dinar is not yet globally traded and unpack the complexity behind its status. To begin with, we must address the most fundamental barrier: capital controls. Capital controls are government-imposed limitations on the movement of capital across borders. In Iraq's case, these restrictions serve both as a protective mechanism and a practical necessity. Since the fall of Saddam Hussein's regime and the restructuring of Iraq's financial system in the early 2000s, the Central Bank of Iraq, CBI, has maintained tight control over the flow of dinars leaving the country. This is not unique to Iraq. Many developing economies enforce capital controls to prevent currency speculation, capital flight, or abrupt devaluations that can destabilize their financial systems. However, in Iraq's case, these controls are more stringent and enduring. The Iraqi government restricts the convertibility of the dinar into foreign currencies outside a controlled window, typically conducted via the CBI's daily foreign exchange, Forex, auctions. These auctions are tightly monitored and serve as a key instrument for stabilizing the exchange rate and managing foreign currency reserves, particularly US dollars. The CBI uses these mechanisms to ensure that large amounts of dinars are not traded recklessly in the black market or sent abroad without proper documentation. While this policy is arguably prudent under Iraq's circumstances, it also inherently limits the dinar's exposure and acceptability in international currency markets. Without the ability to freely convert and move the currency across borders, no significant global financial institution or retail investor can easily engage with it. Capital controls essentially act as a gate that keeps the currency within Iraq's domestic financial ecosystem, isolating it from global trade and investment flows. The third issue that ties into Iraq's inability to participate in global forex markets is the complex web of international sanctions and compliance restrictions. Although Iraq is not under the kind of sweeping international sanctions that other nations like Iran or North Korea face, it exists in a regional context that is fraught with regulatory risk. One of the major concerns of the U.S. Treasury Department and other international watchdogs is the illicit leakage of U.S. dollars from Iraq to sanctioned regimes, particularly Iran. These leaks are often facilitated through opaque banking channels, fake import documents, or corrupt officials who bypass regulatory procedures. The United States has, in fact, sanctioned a number of Iraqi banks in recent years due to non-compliance with anti-money laundering, AML, and counterterrorism financing, CTF, regulations. Moreover, without global compliance mechanisms in place, Iraq is unable to participate in cross-border currency clearing and settlement systems. This leads us to the final point: the absence of offshore clearing and liquidity. Most globally traded currencies have well-established offshore markets where transactions can occur around the clock, independent of domestic regulations. These offshore hubs provide essential infrastructure for liquidity, pricing, and financial derivatives. For instance, the US dollar has the Eurodollar market, the Chinese yuan has offshore hubs in Hong Kong and London, and even emerging market currencies like the Indian rupee have non-deliverable forward, NDF, markets in financial centers such as Singapore and Dubai. The Iraqi dinar has no such infrastructure. There are no major banks offering IQD accounts abroad. There are no forward contracts or futures markets involving the dinar. There are no centralized or decentralized platforms for international investors to gain exposure to the IQD. Without liquidity providers, market makers, or clearing houses, the currency cannot be efficiently priced or traded globally. Even speculative interest, which often drives the early stages of currency internationalization, cannot take root without these foundational elements in place. It's important to note that building this infrastructure is not just a matter of policy decision. It requires years of coordinated efforts between central banks, commercial banks, and international regulators. It also requires a credible and trusted monetary policy framework. Iraq is still in the process of modernizing its financial sector. The introduction of new technologies like digital payment systems and the adoption of international banking standards such as Basel III are steps in the right direction, but they are not enough, at least not yet. These reforms must be deeply institutionalized and broadly accepted by the international community before the IQD can become a tradable asset on global markets. That said, there are signs of progress. Iraq's ongoing work with the International Monetary Fund, IMF, its growing cooperation with the World Bank, and its intention to eventually join the World Trade Organization, WTO, all point to a country that aspires to reintegrate into the global economy. The Central Bank of Iraq has been steadily increasing its foreign reserves, and recent policies aim to clamp down on the black market and enforce a unified exchange rate. These are not insignificant achievements. Still, they are early steps in a long and difficult journey toward making the IQD internationally viable. In summary, the Iraqi dinar remains outside the global trading system for four interrelated reasons: capital controls that limit its convertibility and movement, lack of international confidence due to political instability and entrenched corruption, compliance risks related to sanctions and illicit financial flows, and a total absence of offshore infrastructure to support global liquidity. These issues are not insurmountable, but they will take sustained reform, international cooperation, and domestic political will to resolve. For now, the IQD remains largely a domestic currency, with limited use outside Iraq's borders and almost no visibility on the world's financial radar. As reforms progress and Iraq stabilizes, this situation could change, but only if all the systemic and structural issues discussed here are thoroughly addressed. Thanks for tuning in to Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed and stay ready.